Imagine waking up tomorrow to a world where banks, all banks, have simply ceased to function. No ATMs, no online banking, no credit cards. It sounds like a dystopian movie plot, but what would truly happen if the intricate global financial system, the very backbone of our economy, were to suddenly go silent? The unthinkable scenario of a complete banking shutdown is a terrifying thought experiment. Our modern lives are so deeply intertwined with financial institutions that their sudden absence would trigger a cascade of unprecedented events. Our modern world runs on the invisible, intricate threads of the banking system. The first impact would be immediate and profound: liquidity. ATMs would cease to function, leaving millions unable to access physical cash. Those with money in their accounts would find it inaccessible, mere digital numbers without real-world utility. Digital payments, the backbone of our daily transactions from buying groceries to paying bills, would grind to a halt. Contactless payments, online transfers, direct debits, all would fail. The initial rush for physical cash would quickly deplete any remaining reserves in people's pockets, leading to widespread panic. Businesses would be crippled. Retailers couldn't accept payments, suppliers couldn't be paid, and employees couldn't receive wages. The flow of goods and services, which relies entirely on transactions, would seize up. Supermarket shelves would empty rapidly as supply chains, meticulously orchestrated by financial instruments, snap. The global economy, a vast interconnected web, would unravel at an astonishing pace. Stock markets would crash, international trade would halt, and investments would evaporate. The very concept of money as we know it would begin to unravel, replaced by a desperate scramble for physical goods or a return to bartering. Without banks, the very concept of money as we know it would begin to unravel. On a societal level, the impact would be devastating. Panic could set in swiftly, leading to civil unrest. Basic necessities like food, fuel, and medicine would become incredibly scarce and difficult to acquire without a functioning payment system. Trust, the invisible currency of society, would erode rapidly as people struggled to meet fundamental needs. A bank shutdown isn't just a financial crisis, it's a crisis of confidence in our entire societal structure. Governments would inevitably step in, but their options would be limited. Emergency decrees, nationalization of banks, and attempts to establish temporary, alternative payment systems might be implemented. However, rebuilding trust and re-establishing a functional financial system from scratch would be a monumental, perhaps impossible, task in the short term. The long-term consequences could fundamentally reshape our world. We might see a return to localized economies, a surge in alternative currencies like cryptocurrencies, or even a complete overhaul of how we define and exchange value. The experience would leave an indelible mark, forcing humanity to reconsider its reliance on centralized financial institutions. While the scenario of a complete, sudden bank shutdown is highly improbable, understanding its potential impact underscores the fragility and interconnectedness of our financial world. Safeguards are in place, regulations are enforced, and central banks exist precisely to prevent such catastrophic failures. From the daily convenience of a debit card to the vast global network of trade, banks are the silent engines of our civilization. Their continued operation is not merely an economic necessity, but a cornerstone of the orderly society we often take for granted. It's a sobering reminder that beneath the surface of our digital comfort lies a complex, human-made system that, if it were to falter, could plunge us into an unimaginable future.